pay the price of an entire house just for a single tulip bulb? Or would you spend millions on a digital image? Throughout history, people have chased big dreams for a better life and a brighter future. And time again, they fell into the exact same trap. Balloons inflated with hope burst with disappointment. And billions of dollars vanished in an instant. Today, I'm going to tell you about the 10 biggest economic bubbles in history. But we won't just talk about numbers. We will talk about closed factories, lost jobs, and life savings wiped out overnight. Because behind every bubble, there were real people and real stories. History doesn't repeat itself if lessons are learned. The impact of some crashes is still felt in our lives today. And each one of them shows us this. If we don't learn from the mistakes of the past, the dreams we build with hope can shatter in an instant. Are you ready? Then let's begin. First, Tulip Mania, 1634 to 1637. The first bubble in history is the most iconic, Tulip Mania. In 1634, tulips from the Ottoman Empire became exotic symbols of status in Holland. The wealthy showed off with their tulip gardens. Soon, everyone started buying bulbs, believing these rare flowers would bring them endless wealth. People were trading their lands, livestock, and life savings just for a single root. It wasn't just the rich. Shoemakers, chimney sweeps, and farmers joined the madness. By 1636, the rarest variety, Semper Augustus, was selling for 10,000 guilders at a time when a canal house cost 1,000 guilders. One bulb was worth 10 houses. But in February 1637, at an auction in Haarlem, buyers simply didn't show up. Panic spread like wildfire. Prices fell by 99%, and thousands of families went bankrupt overnight. Today, Tulip Mania remains the ultimate symbol of senseless speculation. The Mississippi Bubble, 1719 to 1720. The second bubble took place in France, the Mississippi Bubble. In 1719, French economist John Law founded the Mississippi Company, promising the unimaginable riches of France's North American colonies. The French public believed the New World would make them all wealthy, and share prices rose by 1,900% in a single year. John Law, who also controlled France's central bank, did something fatal. He printed massive amounts of unbacked paper money to help people buy more shares. The country was drowning in artificial cash. In 1720, the bubble burst, and shares fell to zero. The illusion couldn't last. John Law fled the country in disguise. The French economy collapsed, and the equivalent of $8.5 trillion in today's money evaporated, leaving thousands bankrupt. The South Sea Bubble, 1720. The third bubble happened in the exact same year across the English Channel, the South Sea Bubble. In early 1720, the South Sea Company was founded in England, promising exclusive trade rights in South America. Stock prices soared from £128 in March to £1,000 in August. Everyone invested, including the most brilliant mind of the era, Sir Isaac Newton. The irony was that the South Sea Company never conducted any real trade with South America. It was a company built entirely on rumors, marketing, and political corruption. When the bubble burst in September 1720, share prices collapsed to zero. Newton lost £20,000 to worth millions today. He later famously said, "I can calculate the motions of the heavenly bodies, but not the madness of people." Railway Mania, 1840s. The fourth bubble is the first great technology crash of the modern era, Railway Mania. In the 1840s, the revolution of steam engines and railways fascinated Britain. The government encouraged the building of new lines, and suddenly the public became obsessed with railway shares. Promoters promised that trains would transform the economy and generate endless profits. Thousands of ordinary citizens, from doctors to shopkeepers, poured their life savings into highly speculative projects, many of which only existed on paper. At its peak, the country planned to build thousands of miles of impossible tracks. By 1847, the reality set in. High interest rates made it impossible for companies to raise cash, and the house of cards collapsed. Dozens of railway companies went bankrupt, wiping out the savings of middle-class families and plunging Britain into a severe economic depression. The Great Depression, 1929. The fifth bubble triggered the worst economic crisis of the 20th century, the 1929 Great Depression. The 1920s were known as the Roaring Twenties. The US economy boomed and the stock market rose every single year. Everyone bought stocks, mostly with borrowed money, believing the American dream would last forever. The Dow Jones reached an all-time high in September 1929. On October 24, 1929, to Black Thursday, the market cracked. Panic took over. On Black Tuesday, October 29th, Wall Street completely collapsed. The Dow eventually fell 89%, and it took a quarter of a century for the market to recover. Millions lost their jobs, thousands of banks failed, and a global era of poverty began. The Japanese asset bubble, 1985 to 1989. The sixth bubble brought a global superpower to a standstill, the Japan bubble. In the mid-1980s, Japan had the fastest-growing economy in the world. With low interest rates and cheap credit, everyone invested in real estate and stocks. The Japanese people believed growth would never stop. The Nikkei index reached an astronomical high in 1989, and the land under the Tokyo Imperial Palace was valued more than the entire state of California. In 1990, the Bank of Japan raised interest rates to cool the market. The Nikkei fell 60% and land prices dropped by 70%. Over $6 trillion evaporated. Japan entered what is now known as the Lost Decade, a stagnation from which it has never fully recovered. The dot-com bubble, 1995 to 2000. The seventh bubble was the first great crash of the internet age, the dot-com bubble. Starting in 1995, the internet promised a new world order. Investors poured millions into unprofitable startups, believing they were the future. Having .com in a company's name was enough to skyrocket its value overnight. The Nasdaq rose 400% in 5 years. Companies like Pets.com raised $300 million in capital while making virtually zero revenue. On March 10, 2000, the Nasdaq peaked and then entered a brutal freefall. Over the next 2 years, the index dropped 78%. Startups collapsed. $5 trillion was lost, and the world learned how risky tech speculation could be. The 2008 housing crisis. The eighth bubble caused the biggest financial earthquake of the 21st century, the 2008 housing crisis. In the early 2000s, the US Federal Reserve lowered interest rates to historic lows. Banks began giving massive home loans to people with zero income or credit history, known as subprime mortgages. These toxic loans were packaged and sold to global investment funds. Wall Street giants built enormous gambling houses on these imaginary riches, sending home prices skyrocketing. In 2007, the cracks appeared. As interest rates rose, homeowners couldn't pay, and bad loans flooded the market. In September 2008, the 158-year-old investment bank Lehman Brothers filed for bankruptcy with $613 billion in debt. This crisis cost the global economy over $8 trillion, shattered the myth of too big to fail, and left millions homeless and unemployed. The crypto bubble, 2020 to 2022. The ninth bubble brings us into the digital era, the crypto bubble. Between 2020 and 2021, with central banks printing money during COVID-19, investors rushed into digital assets. People believed traditional finance would collapse and crypto would become the new global currency. Bitcoin hit $69,000 in November 2021, driving the total crypto market to $3 trillion. Projects like Terra Luna promised nearly 20% annual interest, raising billions. In May 2022, Terra Luna collapsed to zero, wiping out $60 billion in days. Months later, FTX, one of the world's largest crypto exchanges, filed for bankruptcy, losing $8 billion in customer funds. In total, $2 trillion vanished from the market, leaving millions of retail investors empty-handed. The NFT Bubble 2021 to 2022. The 10th and final bubble is the strangest of them all, the NFT Bubble. In early 2021, the concept of digital art on the blockchain exploded. Suddenly, everyone jumped in, believing digital ownership would become the ultimate status symbol. The NFT market exploded into a multi-billion-dollar industry almost overnight. Single JPEG files of digital art sold for up to $11 million. But by the second half of 2022, trading volume dropped by 97%. Over 95% of all NFT collections became completely worthless. Files that once sold for tens of thousands of dollars dropped to virtually $50. Approximately $500 billion was lost, showing how fragile the promise of digital ownership truly is. Closing, these are the 10 biggest bubbles in history. Each one taught humanity the same lesson. Hope can sometimes turn into our greatest illusion. But humanity never gave up. We never lost hope. Every time, somehow, we found a way to stand back up. Our dreams don't always end happily, but humanity will keep chasing them. If we can learn from these events, history will not repeat itself. May your hopes and dreams bring you happiness. Which bubble fascinated you the most? Will the next bubble come from the real estate sector or from digital assets like crypto? Let us know in the comments. For more fact-packed content from history to the present, don't forget to follow the channel. See you next time.